What's happening, everybody? It's Huddy. Today we're talking about how to pick the right mortgage and what does that really look like. So we're going to roll through these relatively quick to give you a better understanding of what these mortgages are, kind of what the criteria is, and hang in to the end because I'm going to talk briefly about renovation lending. The first type of loan that we want to talk about is conventional financing. That's the king of financing, and it's what's going to allow more times than not to get your offer accepted easier than, say, an FHA, USDA, or VA financing. Typically in the conventional world, you have a minimum down payment of 5%. Minimum credit score for it to really make sense, you want at least a 680. It is true, 620 does get you done, but it's pretty ugly because interest rates are based off credit score and mortgage insurance is also based off credit score. So a conventional loan could get pretty expensive if you're not at least a 680. Typically 700 is even better. That's your next tier. Within conventional financing though, it's easier underwriting. Again, we're also looking at 2 years of everything. And the cool thing with it, let's say you're someone who only puts 5% down and some time goes by, you can get rid of your mortgage insurance without having to refinance. So let's say rates don't go down and you're locked in and you want to keep that rate, but you want to look at getting rid of that mortgage insurance. Let's say 3 years goes by and the value has gone up and you paid it down a little bit. You could contact your servicer, order an appraisal, and as long as you're at that 20% loan to value, your mortgage insurance goes away without refinancing. So that's a pretty cool aspect. Now, within conventional financing, there's also Home Ready, Home Possible. One is Fannie Mae, one's Freddie Mac. If you meet a certain income criteria, you're a first-time home buyer, actually you can be an anytime buyer, and you meet the requirements though, you only need to put 3% down and you get a cheaper interest rate and you also get a cheaper mortgage insurance rate. There's a lot of benefits to Home Ready, Home Possible. So those are two branches of the conventional world that you might want to consider and see if you qualify for those. I have links to the income maps in the description so you can take a look. It is address specific, but you type in an address and you can see what the median income is and you can find out if you qualify for that type of program. Moving from there, we talk about FHA. A lot of times people confuse FHA and think it's a first-time home buyer program, and that's not the case. Again, it's another anytime buyer, but the cool thing with FHA is it only requires you to have a minimum down payment of 3.5%. With that being said, they also have lower credit score criteria, meaning you can go down to a 580 and still only put 3.5% down. And if you go below a 580, you still could get FHA financing, but you'd be looking at a 10% down payment with that. Now, one of the things with FHA is the mortgage insurance. It's more of a public mortgage insurance, so if all things are the same and I'm a 700 and you're a 580, our mortgage insurance costs are going to be the same thing or the same price. Now, to get rid of that mortgage insurance though, however, you would have to refinance in order to have that removed once you're at an 80% loan to value. So that's a drawback, but again, a positive is 3.5% down and you don't have to have that 700 or 720 credit score. Moving along from there, USDA. That's more your rural areas. And again, people think if they live in a rural area, they live on a farm, and that's not just the case. Or that's not the case. Oftentimes you can be within 40 miles of a major city and still be USDA. That means 100% financing, means a little bit better interest rate, and it also means very inexpensive mortgage insurance. Again, there are certain areas that are going to be USDA and not USDA. I have a link in the description if you want to check that out. You don't have to put in a specific address. You can just zoom in to where you're at and you can find out what areas are USDA if that's something that interests you. Also, we look at the VA for veterans. Veterans get 100% financing, no mortgage insurance, but you have to be a veteran in order to qualify. The last thing that we want to touch on is renovation lending. Oftentimes people think of renovation lending and they think they got to spend $50,000, $60,000, $70,000 on that property in order to properly use renovation lending, and that's not the case at all. These loans can be for conventional, which is called home style renovation. It can be for FHA, which is a 203K, and veterans can also take care of or use renovation lending. It's a VA renovation loan. Kind of the cool things with these is if you're looking for a specific location and you can't find the house that meets your needs, you could simply do a renovation loan on any property and be able to get the house that you want as long as it's in the area that you're in. A couple advantages with that as well is it doesn't have to be that $50 or $60 or $70,000. I've done renovation loans using only $10,000 in order to kind of spruce the place up, meaning paint, some new appliances, some different small items like that. We're still able to use renovation lending to get these people into the house that they want and allow them to redo some certain aspects to make it more of the home that they wanted and get the area that they want. If you have any questions, feel free to drop a comment. Thanks for checking out the video. We'll see you at the next one.